viewers, welcome back to Dukascopy TV. Well, today we're going to have a look at the Islamic financial sector, which is increasing 15% annually and is expected to double every 5 years. Today I'm joined by Ibrahim Awartani and we're going to have a look at this in a little bit more further detail. So welcome today.
Okay, thank you.
So Ernst & Young believes Islamic finance and investments will actually increase to 1.8 trillion this year. Now, it has become increasingly popular since the crash as people actually believe it is a safer option than traditional banking. Now, do you think this sentiment will actually continue despite the more bullish feeling recently about the Eurozone and about the global economy?
Yes, yes, of course, it will, because Islamic finance, it is a part of the global economy and well integrated into the capital market. So it's difficult to separate from the Eurozone or global or Islamic world. It's well integrated, and last estimations of Standard & Poor's indicated that the market will surge up to $3 trillion by 2015. So it provides sovereign governments and big corporations with a huge access and growing to Islamic liquidity, especially for mega projects, long-term mega projects.
And speaking of sukuk, which are Islamic bonds, now they are not your regular bonds. Can you tell me what exactly differentiates them from the normal bonds and what do you expect to see from the Islamic bond market?
The difference between sukuk and conventional bonds, it appears from the definition of sukuk. Sukuk refers as certificates of equal value representing undivided share in ownership of tangible assets, usufructs, services, or particular projects, or special investment services. It means that sukuk holder has a right to an ownership part of undivided ownership, and this is unlike the conventional bonds. So in sukuk, it's necessary to have underlying tangible assets to issue the sukuk accordingly. Is unlike the conventional bonds. Conventional bonds, they don't have the same character as the Islamic bonds.
And recently, the Dubai government kicked off its sovereign sukuk sales with 750 million of Islamic notes. Now, this was after borrowing costs fell 40%. Can you tell me more about this?
Dubai government acted through the Department of Finance and opened the first issue for the year in Middle East and North Africa capital markets, which is the issue of 750 million sukuk, 10-year. It was a dual tranche landmark transaction to raise $1.25 billion, a part of it 750 million sukuk and 500 million as conventional bond for 30 years. It's the first ever 30-year conventional bonds. Dubai wants to benefit from the lowest borrowing costs that been traded recently between 211 basis points, while in 2009 was hitting the levels of 600 basis points after its debt crisis in that time. Dubai government will issue ahead a sukuk of $1 billion for a state-owned company. This state-owned company, it's named Dubai Electricity and Water Authority, plans to issue at the first quarter sukuk to raise $1 billion, using the proceeds to refinance existing debt and invest in its project. So it was to mention that Dubai is still unrated, Dubai sovereign still unrated, while the borrowing cost dropped to 40%. The Dubai Electricity and Water Authority last November was raised the long-term credit rating by Standard & Poor's from triple B minus to triple B plus. And this bring a big trust to international investors, and they feel more comfortable to buy the sukuk of the state-owned company. But generally speaking, I think in this year we will have we will have many issuances of sukuk from GCC countries and also from Malaysia, besides the banks and the big corporations.
Thank you very much.
Thank you very much.
Well, viewers, thank you for watching Dukascopy TV today. Coming up next, we will have Nicholas Perdue to speak about Basel III and banking regulations. But for now, goodbye.